Hello and welcome to the Upsides Fund Focus. I'm Helen Pang. I'm here today with Madeline Kaminski. Maddie is an investment associate who covers the Fidelity International Concentrated Equity Fund. Hi, Maddie.
Hi, Helen. Thank you for having me.
The fund we'll be looking into today is the Fidelity International Concentrated Equity Fund managed by portfolio manager Patrice Quirion. Patrice is the global equities portfolio manager here at Fidelity, also managing the Fidelity Global Concentrated Equity Fund, Fidelity Global Fund, Fidelity Global Equity Private Pool, and Fidelity International Equity Private Pool. Maddie, you are an expert on these strategies. Could you please walk us through the differences across each one?
Yeah, absolutely. While Patrice employs the same investment approach across all three of his mandates, there are a few distinct differences that set each fund apart. The main differentiator between the global and international funds lies within their geographical mix. In the global funds, Patrice is able to own companies across the globe, whereas in the international fund, the focus is on investing in companies located outside of the US.
Let's give a bit of more background on who Patrice is as a manager. He has been in the industry for 20 years, and his contrarian investment style targets quality at a reasonable price. Could you please explain what that means?
That's a great question. Contrarian investing can be described as making investment decisions that go against the prevailing market sentiment. Patrice employs this approach as a portfolio manager, often seeking out-of-favor opportunities in which short-term issues don't compromise a company's long-term outlook. In these situations, Patrice looks for opportunities where normalization could lead to significant upside, emphasizing a belief in mean reversion of investor sentiment over time. Following this, Patrice targets predictable, durable, and growing businesses that can compound over time and may be mispriced by the current market.
It was hard to tell exactly when it turns, but when it turns, I want to be there before it turns. I try to pre-position the portfolios, trying to take advantage of those exaggerations that the market creates. And there was a lot of that last year. I still think there's a fair bit of that today. Less extreme. Yeah, I think Europe is looking less mispriced than it was, to be fair. I still think it's more compelling in a lot of cases, lining up like a US multinational versus a European multinational. The European stocks tend to still trade at a discount. And again, we're still lower in that cycle. But it's not as extreme of a divergence as we had last year.
A good example of his contrarian investment style in practice can be seen through his decision to bet against the US market over the past couple of years. In Patrice's opinion, US markets had become less conducive to finding opportunities at reasonable prices with attractive growth prospects, causing him to underweight the US in his global funds in favor of more attractive opportunities internationally. This exemplifies his contrarian investment style, as over the past couple of years, the notion of US exceptionalism caused many investors to overweight their allocation to the region, whereas he went against broader sentiment by focusing instead on international markets.
I think we might be, I can't guarantee it, but it appears we might be at that inflection point where that decade of US exceptionalism is looking peakish, while the rest of the world may have, I think you need to be selective. I think there are loads of opportunities. Those markets are not overpriced in aggregate. Fundamentals have the potential to get better. Capital has the potential to continue to flow back. So yes, I am optimistic on the relative basis on international markets more so than North America. Then I think we'll need to, again, depending on your time horizon, but I think we need to ask ourselves, is there too much concentration in that narrow part of the market that becomes at risk, especially like on the AI hardware infrastructure build? That is a lot of market cap, that has a lot of correlation with meme stocks, with cryptocurrencies, with everything that the retail investor typically touches. All of that, if it unfolds, all of that unfolds. And there's no valuation support like anywhere in sight. So I think the international benefit is not only to capture potential opportunities, but I think also plays a role in potentially protecting you against what I think will be an eventual reversal of that melt up that we've seen.
Patrice's strong stock picking and contrarian investment style has allowed his fund to perform strongly amid market volatility in the beginning months of 2025 and excel through the recent market recovery period, outperforming both the broader global and international equity markets. Fidelity International Concentrated Equity Fund Series F returned 25% over the year-to-date period ending August 30th, 2025, delivering an excess return of 8.9% in comparison to the benchmark and beating 98% of peers in the International Equity Morningstar category. Maddie, can you please walk us through how Patrice has been able to achieve these strong returns in comparison to the broader markets?
It's no secret that international markets have been the focus for investing in 2025. Patrice has been a strong advocate for the case for investing internationally long before the market inflection we saw earlier this year. His contrarian investment style led him to position the fund into areas where the broader markets weren't present, allowing him to capture significant upside in comparison to his benchmark when markets turned over the year-to-date period. The fund's investments in and overweight exposure to Europe was a strong contributor to the fund's outperformance, as was its investments in the consumer discretionary sector.
I think we need to be nimble and try to take advantage of some of the big moves and readjust our weights. So in April, what we've seen with Liberation Day, like the big tariff shock, it may come to a surprise to a lot of people, but not truly a surprise when you understand how the market works. The stocks that came down the most during that week, more or less, are not the companies that were exposed to tariff the most. The stocks that came down the most were the most crowded, long positions.
Patrice filters an investment universe of over 50,000 stocks to a concentrated portfolio of just 40 to 80 companies that fit within his prudent investment selection process. The fund has broad investment parameters to allow for significant portfolio flexibility. Can you please give us a clear view of how Fidelity International Concentrated Equity Fund differs from its benchmark?
Patrice follows a bottom-up approach in selecting investment opportunities for the fund, which often leads him into areas of the market that may be overlooked. When you look at how the fund is positioned against its benchmark, it's clear to see it differs quite significantly across each sector. A good example of this would be the fund's overweight to the consumer discretionary sector. Companies operating within the Chinese consumer discretionary space are an area of strong conviction for Patrice in the portfolio. In his opinion, the emergence of Chinese multinationals will bring competition into the global landscape, going toe-to-toe with their U.S. competitors for market leadership. Chinese multinationals will be able to compete on cost, offering comparable quality to their U.S. counterparts at a lower price point.
I like to bring everything into a framework where most patterns will follow some sort of cycle. There are short cycles and there are long cycles. The short ones everyone's paying attention to. The long ones are easy to get overlooked or to get confused with like a secular trend as opposed to a cycle. And what I've been talking about for like over a year now, well over a year, is that I think we are getting to this point where the US economy, its consumer, its fiscal spending, its corporate spending, is starting to look somewhere close to the peak of its cycle. Those long cycles last a long time. As a result, it's hard to have the perfect timing on exactly when that changes. But I think this is the picture. But what's interesting is you look elsewhere, you look in Europe, and especially you look in China, and you can start looking at same like main economic players, the consumer, the fiscal side, the government, and the enterprise or the corporate sector are all closer to a bottom or maybe a little bit more like mid-cycle in Europe. And those eventually revert.
That's all for today's show. Please follow us on our socials, including Instagram, YouTube, LinkedIn, Facebook, and Reddit for more great content and the latest financial updates. You can also head to fidelity.ca's investor education section to check out our articles, sign up for the Upside newsletter, get information about upcoming live webcasts and on-demand videos. Whether you're learning investment basics or looking for more advanced knowledge, we can help you become a more informed investor. As always, working with a financial advisor is among the best investments you can make. Thanks for watching, and I hope you'll join us again on the Upside.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.